is the financial projections section. The purpose of this is to really help you get clear on your financial situation for your business over the next 1 to 2 years. And as we put these numbers onto paper, that's going to help. There should be cross information and a connection between your financial projections and what your recovery plan says. So for example, if one of your goals was to increase revenue by 30%, we should see a financial plan that has you obtaining that goal. If your goal is to cut costs, we should see that in your recovery plan. If your goal is to do a large rebranding project and you're anticipating there's some expenses with that, because there probably is, unless you're doing this all by yourself, we should see that in your financial projections. So we really want to see alignment between these two things. One is the numbers on paper for the explanation, the analysis that you're giving to that recovery. Right. So, purpose of this financial projections model is to get you anticipating what the future might look like. By future, you can define exactly when this starts and when this finishes. This is going to set you up for 2 years. So my recommendation would be that a lot of you are probably looking at this starting at the earliest, January 2021. If you're a highly seasonal business and you know no revenues are going to occur between January and April, you can build that in and start this at April. So there's some flexibility, make this work for you. But the key part here is that this is future and not past. So if you're starting it in November, by the time we're done with this, it's already going to be a month out to date. So go to the future. The first thing that you're going to do, the first tab here is called projections. And this is where we're going to spell out month by month what we anticipate things will look like financially. The first section on here is revenues. Another word for revenues is also sales. So this is the income that your business makes. Depending on the type of business you have, this is going to be either your products or your services, right? So if I'm Mark, ice cream is going to be on here somewhere. If I am Jan, I'm hoping I'm pronouncing that right. Please forgive me if I'm not. Your beer is going to be on here somewhere, right? If I'm Crystal, this is going to look a little bit more, it's going to be a delivered good or a contract, right? And so for Crystal, this might look more like an hourly rate on a contract. Those types of examples. I'm trying to think of everybody's off the top of my head.
Some climate sales, maybe.
Mm-hmm. Yep. So if this is something that you sell and you earn money from it, it should go here. This is all your income. You can add more cells if you need to and leave ones blank that you don't need or delete them out. I usually, the table functions best if you leave them there. But put in all of the things that you sell. If you have like 50 different things you sell, you can do some grouping here, right? And so if I have a coffee shop, I might average out my coffees instead of listing out latte, cappuccino, all of these different things. So that's what's going to go in your revenues. Again, this is just your sales. Any questions?
Would you put grants or donations in there also?
Yes, on both. Any income that is, any money that is flowing into the business, we want to have that go here.
Hey, Ashley,
Yeah.
if they're like, for example, we have the bike rentals, but we also have a retail shop. In the retail shop, should we break it down? Should we just do it as all the goods sold, or should we break it down into like jewelry, food items? Like, how should we work that?
In the way that, the short answer is going to be in the way that makes the most sense to you.
Okay.
I've seen lots of people approach it in different ways. So for example, one business might totally separate out, depending on your structure, you might separate out the bike business from the retail business. If they're two different businesses, particularly if you have two different business licenses, that might be a good measure. If you have this all clumped together, then yeah, creating a logic model that makes sense to you about what those categories are. So like like you mentioned, like jewelry might be one by itself. Like for example, in a grocery store, you might have all of your deli items together in one. You might have all of your dry goods together in one, that type of thing.
Can you clarify, is this, we're projecting for 2021, or is this based off of this year?
You want to look into the future. So I think most of you are going to be looking at 2021. The numbers that you pull here should come from as much as possible from past data. So for example, I was recently working with an entrepreneur on this, and their projections for 2021 were based off of their operating history April through September of this year. And the reason they chose that specific set of data is because at that point for their business, COVID had kind of settled down a bit. And so what they were seeing was that was the new normal for them in terms of what they were selling, was this like April through September timeframe. If you don't have that, let's say you weren't operating at all this summer and your numbers are from last summer when COVID wasn't happening at all, then what you do is to take that past data and come up with your logic model for what the future is going to look like. So let's say, for example, and Tim, I'm just going to throw this out there and I'm going to do some wild guessing. So please don't, these are just my guesses. Let's say Tim had, 100% sales last year and last summer. Based off of what he heard in the conversation with Milani yesterday, maybe he says, all right, I think that I'm going to draw up one financial projections that's 30% of what my last year was. And so he's going to take his data and he's going to make revenues that are 30% of last year. So you want to create a logic. You want to have you're building in some assumptions. You're going to take past data and you're going to use that to make some assumptions about what the future is going to look like.
Okay, I have a question.
Mm-hmm.
So you've got the goods and the services. Like with us, we do copies for people, but would that be goods or would that be service?
You're making copies?
Yeah, we do
Photocopies?
copies or we mail for people. I mean, because like we could do good could be postal, but
one thing is you don't have to worry too much about the description, like calling it a good versus a service, because this is really just for you. But if the thing that you're selling is sticking the box in the mail and getting it from point A to point Z, I think that's mostly a service. If you're selling the box is a good. So your services are actions, right?
Right. Okay.
And just think about it as revenue streams too. Just
yes,
any major revenue stream.
Well, because I'm thinking like when I put it in QuickBooks, I do like boxes or I mean, we don't really have it all broken down.
Yeah.
Yeah.
I own a bakery and I just clump all my baked goods into one revenue stream, baked goods. But I bake.
The POS breaks it out, but I don't when I enter it. So
yeah.
It just all goes in as miscellaneous sales.
Some breakdown could help you, right?
Well, I mean, I break it down like by the person we buy it from. So I could do a breakdown of, I could break down the miscellaneous sales with the POS.
Okay. So one other thing to just throw in here, you want to use you want to break this into levels that are going to serve you, that are going to help you do some analysis for your business in the future. If all of your goods and services are just clumped into sales, that disables you from being able to analyze how much, where's the money coming from? Like what is helping your business grow and what are you losing money on, right? We are not able to analyze what your profit margins are. So what money remains after you pay for all of your expenses on your ice cream or on your coffee. You do want to break your goods and services down enough that you can see and analyze kind of group by group what's going on, even in the spreadsheet.
I have a question. If you provide a service like I do, but each individual contract that I get is a different amount of pay. It's not necessarily an hourly rate. Some of my contracts I charge a lot less if it's for a nonprofit or educational purposes versus like a corporate customer, I might charge full price. Or they might be offering a specific set budget
Mhm.
that are just not comparable to my previous contract. Should I come up with an average or?
Yes. I would maybe do some groupings. So it sounds like in your head, you've already got a little bit of this answer, which is you've got like a nonprofit education grouping, right? And then you have a corporate grouping, and then maybe you have one that is just average contract basis. So again, splitting it out a little bit so that you can do some analysis on this, but not so much that you're like spending an hour counting pennies over what's going where.
Yeah, you did just say, so nonprofit rate is like one service. Corporate rate is a second service. And then maybe just an average one that's in the middle, or maybe it's something lower, like it's a sliding scale, sort of what people can afford rate or something. And then when you're budgeting it out, you're going to figure out how many nonprofit rate hours can I really do in a year versus my corporate profit hours, you know? And so think of them as sort of separate services.
Questions are great, guys. So this is just the income and the revenue portion. So I think we've had some good conversation about what the income and revenue, what the types of income and revenue can look like. And that is what you're going to put over here in the titles. So you're going to replace good number one with, for example, nonprofit rate, or with bicycle tires, right?
I have one more question. Do COVID relief funds count as revenue?
I believe they do. I believe Mark spoke about that yesterday. So any money
Yeah.
that's coming in from the business, yeah.
Yep. Taxable revenue, unfortunately.
The loan stuff, the PPP stuff wouldn't, but
No, yeah.
grants would.
But also, do you want to include that in financial projections when that was more of maybe a one-time thing?
So
I
it
think
depends on
the
whether,
timing. Sorry.
yep. Yeah, if this is going to go forward into the future and you're still using those funds next year, then yes, put them in there. If it's past, it shouldn't go on. If that money is up and done by December this year, it shouldn't go in 2021. So on the far left, you're going to make the names for each of your products or services. And then over here, starting with column B, this is where we're going to look at how much revenue or how many sales, the dollar amount that's coming in on a monthly basis. So remember, you can define these months and you can even change them. So I might say January here, January 2021. And then if this is my coffee, let's say I clump all my coffee together. I'm going to change that right there. Then in January, I know January is a slow month. And so my logic model is $5 per coffee multiplied by, I think I'm going to sell, based off my last year's history, about 1,000 cups of coffee in the month of January. And I need an equal sign because that's my favorite thing to forget. There. So a couple important things. Number one, I think it's really useful for you to create, put the equation into that box. And the reason that's helpful is because you can go back and look at it. It can be really easy if you leave this at just 5,000 to go, hang on, what did that mean? So I personally prefer doing that this way. There's also another method I'm going to show you in just a minute about how you can spell that out. Second, you'll notice that this just flowed right over into all of those months. But the other thing you're going to be able to do is you can go in and edit this. So let's say January through March all looks pretty similar. But once I get to April, this is really going to look like $5 multiplied by 1,500 coffees instead of 1,000. And then that flows through. So what I love about this is you can build in some seasonality. If you, and Elena's brought up a great point, this is a quick and dirty one. This is one that's just pretty simple and easy. Some of you are already operating from more complex financial models. Use those. Don't feel like you have to transition over to this. This is really great if you've never done one before and this is your first time looking into the future on your financials. This gives you kind of a quick and dirty way to do that. If you're starting with this and you're like, Ashley, I definitely need something more complex, I have a tool for you. Just give me a call after this afternoon or whatever, and I can walk you through that one instead.
Also,
So,
this is all we require for the grant. So
yes.
if you do have a more complex one, we just want to see that this is what's covered for that grant purpose.
Yeah, and Jan, you're asking if I can make this a little bigger. So let me try. Let me know if I need to do that.
If you can kind of play around with different views on the right hand and the button on the right hand side, and then there's also between the squares where the people show up and then the screen share, you can like drag kind of with an arrow back and forth, and that might also help you size it up or down.
Perfect. All right. So like I said, you're going to go through here, change your months to what they're going to be for you. Use some logic, hopefully based on some past data plus COVID plus some guessing here. Create your logic for what your sales, you think your sales are going to be, accept some level of ambiguity. And then you'll see over here on the right, it's going to start adding things up for year one. So this is just my coffee year one. This spreadsheet has built in an assumption of a 3% revenue increase from year one to year two. This is partially based on inflation or the rate at which the value of money increases over time. If you don't like it, you can pull out the 3%. 3%, I think, for most entrepreneurs is fine most of the time. You could zero it out if it makes you happier. I would not increase it past 3% unless you have a really good reason for doing so. So that you might, and you might. So you might say, man, I know that X, Y, and Z is going to happen, therefore it's going to be 6% instead. And I'll show you a little bit later on how we can do that. And so in terms of how specific you get here in your revenues, this is going to be up to you. If you're using this model, I believe that you can add some extra cells here, but it might get messy. So just play with it and come up with either your groupings, or you can list things out really specifically according to each product or service. I think we've hit the heart of revenues.
Before we move on, can I jump in for one quick question? Because I'm kind of at a crux point that I haven't got past. We do an accrual method of accounting, and so we don't recognize revenue until the departure has happened. So it secures us from refunding money we've spent. I have a model from our reservation system, and I have a model from QuickBooks, neither of which reflect the reality because we have more revenue streams than just direct booking. And we also, QuickBooks is kind of like the quick and dirty, like unreal. It's not our accrual method. So for the purposes of this sheet, even though that's not our accounting practices, could I just recognize revenue as it comes in? Since we had a very nominal refunding in 2019?
Yeah.
Okay.
Yeah, you can do cash basis. You can even create an expense item for refunds to budget it in.
Oh, okay, that's a good idea. Okay, thank you.
Each month, sort of say like, we had spent 5% is going to go to refunds every month, and then you have that line item.
Cool.
So yeah, you're just budgeting, and you can cash basis is the best way to do it.
Right on. Cool. Thank you.
Cool. Let's move on to some expenses. So there's two very general different types of expenses that we work with. One is called fixed expenses, and the other is called variable expenses or cost of goods here. So you'll notice, and I'm going to zoom out here for just a second, as soon as I can remember how to do it. So you'll notice we've got this green tab pulling together your revenues and also your cost of goods or your cost of goods or services. These two get clumped together because this type of expense, cost of goods, also called variable expenses, when you're doing your taxes, that comes out different to your fixed expenses. And one of the other things that we want to be able to analyze is gross profit. And so there are certain types of expenses that are called cost of goods. Cost of goods are the things that you pay for pretty much just when you have that transaction or that sale take place. So for example, with coffee, my coffee beans are a cost of goods because basically I'm just utilizing that resource when I make a cup of coffee for a customer. That's different from paying my barista to be in my coffee shop for 8 hours because she's got to be there whether or not I have a customer come in. And so that labor time for my barista, that's going to go down below outside of your cost of goods. So now we're getting into all of these different types of expenses. And what I'm trying to highlight here is there's some expenses that are going to go up here into cost of goods and services. The rest are going to go down below. With all of these things, you're going to see a whole bunch of different categories of things that might or might not apply to you. If these things don't apply to you, skip over them. The reason they're here is to prompt you to think about them and to get them onto paper, because this model is only as good as the data that you put in. And so if we miss a whole bunch of expenses, that's going to significantly throw off what your financial projections are. So the first thing you want to do is capture all of the expenses that go into your cost of goods. While we try to say that it's black and white, it's either cost of goods or it's not, the reality is that for most of you, this is going to be a little bit messy. So for example, a lot of tour operators are utilizing fuel on each tour, and you pretty much are just using that fuel when you go out on that tour. For many of the tour operators that I've worked with, it's really difficult for them to calculate the cost of fuel per trip. So if that gets too complicated for you, you can put it down below into more of a monthly expense. Reality is it's probably your cost of good because it's only happening that way, but you're going to be able to flex this a little bit for what's going to make sense for you.
I have a question, Ashley. So for example, when we're renting out our bikes or people are going out on tours on our bikes, how would we figure out the cost of goods sold on that rental?
Yeah. So break it down into everything that goes into your rental. I'm guessing that one of the biggest expenses for your rental is repairs. Is that right?
Yeah.
Repairs and maintenance?
Yeah, probably.
What else goes into it?
Well, I mean, the cost of the bicycle, you figure they're electric bikes, so they're having to be charged. But really it's going to be the maintenance of the bike and the cost of the bike, and maybe even, replacement batteries, stuff like that as well.
Great. So again, decide what makes sense for you, whether or not it's a cost of goods or service that you can take out like specifically from that item, or whether or not it's something that's fixed and more on a monthly basis. So for example, in your fixed expenses, and I don't know if it's specifically on this one. Yeah, look, we've got a whole bunch of repairs, right? So maybe this is your equipment repair, or this is you might class this as like a vehicle repair. You can set out the title and say repairs bicycles. And you can have that be whatever you think it's going to be on that monthly basis. And that's probably going to be tied to the amount of rentals that you think are going to take place. So if you say, I think 100 rentals are going to take place in January, we're going to take that and multiply it by a certain rate for repairs. And that's probably going to go up a little bit in the summer and go down in the winter. So repairs should be down here. Purchasing your bicycles should be down here somewhere. So if you know that on average, you purchase 2 new bicycles every quarter, then we should see that coming out every 4 months as an expense down below. So goal number 1 is to really try to capture everything and put it on the spreadsheet. And then if this is the first time you've done something like this and you're just really unsure about like exactly where to put it, that's where I'd recommend we do a one-on-one coaching follow-up call, and we can just talk through your logic and just see if it makes sense to have each thing where it is, and just make sure that ultimately the numbers are coming out in the way that looks pretty accurate for you and your business.
Okay, great. Thank you.
Mm-hmm. More questions on expenses? So we've got cost of goods up here. Just chime in if you've got a question. This is going to total out and tell us what our gross profit is. So this is interesting because we're going to start to see before my fixed expenses, when I'm just paying for the things that go into that cup of coffee, how much money is left over, right? So that's question number 1. And the reason that that's a question is that there's different industry standards for each of your industry that can tell us a little bit about how you compare to other companies and their gross profit rates. Then we're going to look at our salaries and wages. So this is somewhere where you can add in, there's lots of different ways that you can pay yourself and your employees. If you're familiar with some of those, add those in here. And you can also just roughly enter this in. So you could put owner number 1, put the amount that you're typically paying yourself or you're planning to pay yourself in 2021 here. You want to make sure that you're capturing all of those salaries and wages. We're going to see that total up.
Do we do that if we don't have any employees?
If you can, so skip anything that doesn't apply to you. So if you don't have an employee, skip it. Hopefully you're going to be paying yourself something here if that's a need that you've identified for your business. But if you have no salaries and wages, you can skip all of these. They can stay 0. Same goes for all your other expenses. Don't feel like you have to enter in something if it's not true for your business. So you've got salaries and wages. You've got fixed expenses. These include things like your CPA, your accounting software, education and classes that you might know you need to take on a regular basis, maybe to maintain licensing or to provide certain goods and services. You've got leases, internet and computer, software, mortgage, permits and licensing. Your business license that you purchase every year should go in here. Your website, if you pay a monthly fee for your website, make sure we capture that. Again, this is just going to be as good as the data you enter. So if we miss a whole bunch of stuff, this is not going to accurately reflect what the future is going to hold. And like Caprice said yesterday, it's best to underestimate your revenue and overestimate your expenses.
Okay, so like for software, we pay every month, we pay like I guess a software maintenance for our POS system for the postage and stuff. Would that would all go under software, but it's like a monthly maintenance fee. It's not the cost of the software.
So you can change all of these to be a better description for exactly what you have. So if you want to put like software dash maintenance, go ahead and throw that in there, especially if you want to differentiate that from just regular monthly subscription.
Right, we do, because we bill it. I mean, it comes out different.
Yep. Go ahead and differentiate that. This should help reflect what your model is and how things look for you.
Okay, and like I can pull all what we sell, everything off our POS.
Yep.
It's not that way in QuickBooks, but I could pull that to do this and then do our revenue. Okay.
Yep. QuickBooks versus other systems, again, pull what's most useful for you, what's going to make sense when you're trying to think about this future budget.
It'll be coming from both of them to.
Great. Good questions. Going to keep scrolling down. So there's more variable expenses. Again, just kind of trying to prompt you to think of everything. We've got utilities. If you do travel, back when we all used to travel regularly, you can stick that on here, particularly for trainings or work, networking events, those types of things. Fuel is a big one. Fees, if you pay credit card fees, if you pay legal fees, advertising. So like I said, if you're talking about doing a big marketing plan increase in 2021, we should see some type of advertising fees there probably. Continuing to scroll down, this is going to give you your total expenses, and then it's going to automatically calculate what your net profit is. So your net profit is what we think of as what comes home to you at the end of the day, right? So once we take all your sales minus all of your expenses, we're going to look and see, is there a profit? Is there money left over in the bank? So if there's not, this is going to be a negative number, right? And if there is, we're going to see a positive number here. Below that, so this is a model that we also use with our clients when they're coming to Spruce Root for a loan. So below that, we have a loan request in here. Totally ignore this if this doesn't apply to you. This is just something that we build in where it's useful. And I believe there are other, let me double check here. Yeah, there are categories for other loans up around line 66. This is where you can put in, if you've got a commercial real estate loan, you can add this in here. You can add in both your principal and your interest to make sure that you're capturing all of your expenses. If for 2021, you're thinking of building out or growing in some new way, and you want to look at what the future looks like with that loan specifically or without, you could always change this from Spruce Root to any other lender. So this is the projections. This is where the details all go. And again, you're coming up with that logic model and putting the numbers in and trying to capture everything, all of the income and all of the expenses. Any questions on this tab before I move to the next one?
Do they not have for like credit card?
They do, yeah. Yep,
Is it
credit
example?
card.
I see bank service charges, but that to me would be different than like, or would that be the credit card and the bank, I guess?
I thought credit card was on here somewhere, but if it's not, just rename something else that doesn't apply to
Okay.
you, specific to be a credit card.
Okay.
Great questions.
If I got housing relief for COVID, would that also be in my income if I'm working out of my house?
Good question. Are you a sole proprietor for this?
Mm-hmm.
It depends on the source of the COVID relief.
That would just probably show up in your personal income tax, not your Schedule C, I would think.
Do you claim office space in your home on your taxes?
Was the income specifically assigned to your business? Or did it go to you as an individual? Like, did it come in the form of did it come in the form of relief for you as like the business owner, or did it come to you as an individual?
It came to me as an individual.
Yeah.
Right,
Some
but
of
she's
these-
saying she works out of her house.
Right.
It does depend on if, like on your taxes, you're claiming a portion of your house as an expense to the business. Then you could, then that same portion of that revenue could go to offset the cost of that portion of your house.
Hey,
This
Crystal.
is what I love a CPA for.
Have you ever with your taxes done the square foot percentage of what you use as office space? Because
No.
if you haven't, then it wouldn't categorize as a business for this year's tax purposes, unless you plan on doing it this year. There's a fun, it's something you remember if you did it.
Yeah, you would know, and you should talk to a CPA about it, because you can expense a portion of your house. If you're working out of your home, there are some really strict rules around it. And you have to have a certain workspace delineated, and you have to measure it. Anyways, you can expense that though. So like if you're paying rent or mortgage, a percent of that cost can be expensed to the business, which is great, because then you're not paying any taxes on that income.
It sounds like it would be worth it for me to look more into it. It is,
Yep.
it is also my studio space. My living room is.
Yeah, it's a great CPA question. They can walk you through how to make sure you do it correctly.
Thank you.
Great questions, guys. Tab 2 on this model is also really important. And so tab 2 is where you're going to put down in notes what all of these numbers mean. So one of the things that I find a lot, it's really easy the first time you go into a document like this to be like, okay, sales, January, 5,000. Then you come back to this. For me, on a good day, a week later, on a bad day, even less than that, and you go, wait a second, what does that 5,000 mean? Was that when I was multiplying my coffee cup at this price multiplied by this quantity, or was it something else? So these notes are where so much of the value is. You should put into writing what your logic is. So remember I said, I'm going to take maybe last year's data multiplied by something, and that is going to give me my future. I want to make note of what that is. So I might say 2020 multiplied by 30% for each month gives me my sales amount. So put down in writing how you got to the number that you arrived at. You should do that for revenues and for all of your expenses. In some cases, it might just be exactly the same as 2020. And you might put that down and say, same as 2020 P&L. And then also put where you pulled that information from. So if you need to go back and double check it, you can get that. So you might say from 2019 P&L, these dates through these dates. So the notes should serve you, and they should also help make it clear how this ties back to your logic for your business plan. Any questions on your notes? I would say definitely err on the side of putting more notes than you think you need, because that brain just gets fuzzy over time. All right, last but not least, this spreadsheet is going to start to pull what you put in the first tab into the third tab. So for example, we started putting in my coffee income right here. You're going to see that that's pulling my year 1 and my year 2. So these are future projections. It's going to total your revenue. It's also going to total your cost of goods. It's going to give us a gross profit. And then it's going to recopy over. So you don't have to type anything here. This is going to recopy over in these dark green cells from page 1 and tell us what your expenses are as well. So that's just these 2 columns. The other columns I'll talk about here, this is for past data. So for those of you that have a year 1, so for those of you who are functioning in 2020, this is where 2020 would go. This is where 2019 would go, and this is where 2018 would go. And you can pull these if you've got your tax returns and your year to date on your financials. That's where you can get this data and enter it in. The reason it's useful is just showing you how different the future is compared to the past. Questions on this sheet?
Can you go over again really quick as far as how to, sorry, just really briefly, for year to date, how to put in CARES grant money and PPP loans and everything?
Yeah, so those should come in as revenue.
Got it.
Taxable revenue.
And I guess would you like do it as just like a separate kind of sales essentially, or would you do it just kind of however you want?
Yeah, so for this, you're not going to be breaking down your year-to-date revenue.
Right.
Yeah, so you don't have to break it down into the specific categories. It's just going to be a lump sum of all of your sales plus the PPP and those other forms of taxable income.
Okay.
And all of that'll get lumped.
The PPP goes there too, even though it's not taxable, or
If it's the taxable form of PPP, then it goes here.
how do you tell if it's tax?
That is a good question.
Because if it's forgiven, it's really a grant.
Mm-hmm.
So
Ultimately, so this is probably where checking with your CPA is great. And also looking at how your CPA is billing it right now on your P&L should help you. Does that help answer your question, Christy, a little bit?
yeah,
Or Elena, do you have anything?
I could call him and see, because I mean, he doesn't have my stuff for this year yet. So, but I could call him and ask him where I should put it. I mean, I put it separate as like an income thing in my QuickBooks.
So Elena, like the forgivable portion of PPP, does that still get pulled in as revenue?
I think it's
No,
taxable.
because that had that. Oh, for this year.
Yes.
Yeah. It's taxable.
It's only taxable when you get forgiven.
It's taxable if it's forgiven, yes. And you can assume it's going to be forgiven if it's under 50,000 or it was all used for payroll.
But Mark's recommended we wait till 2021 to get it forgiven so it doesn't hit this year.
Yeah, Mark's recommendation was wait till 2021.
So we wouldn't put it in for this year then?
For forgiveness, no, you'd apply in 2021 is
right. But I'm thinking where the year to date, we put it in on here though, if we're not going to do it till 2021, do for the forgiveness.
Yeah, because I mean, ideally you would have spent it in 2020. I think you still have to show that it was spent in 2020.
Right.
Sorry.
Right.
And ours was all on wages, so.
Yeah, so you show it was spent in 2020, so you received the revenue in 2020, offset it with the expense in 2020.
But in here, it would just go in our revenue. It wouldn't go in the expense because the wages would already be coming out in the expense.
Yep. Yeah, that's what I mean. Yep.
Yeah, I had gotten a letter in the mail from my bank saying that my PPE is going to be due for payments at the end of this year. So I'm not quite sure how that would work because, you know, it's a loan and basically whatever's not forgiving has to be paid back to the lender at that really small percentage. And so they said that they would start collecting payments at the end of this year, and it was only extended till the 31st.
Oh, mine hasn't even let me put in my forgiveness paperwork yet. It said they were waiting for more information from the IRS.
Yeah, so I got under $50,000, so I did the simplified application already to get forgiveness. Yeah. But like, if something wasn't used at 60% for payroll and ended up having to get paid back, my
they're
bank
going to collect payments.
They're going to collect payments starting at the end of this year.
But and your bank let you turn it in already?
Yeah, I go through First Bank.
Yeah.
Mm-hmm.
Yeah, I'll say because my bank hasn't even let me turn it in yet. The one what we went through for the loan.
Each bank is doing it different.
Yeah.
Each bank is interpreting it a little differently and then deciding what they're going to do independently. That's what makes it so confusing. And
right, because I've got my application all done. I've emailed it to them and everything, and they're like, "Oh, you have to wait."
Yeah, you just have to follow what your bank says.
Yeah.
But yeah, I mean, I'm trying to remember what the original question is. You're right. You're recognizing the revenue in 2020 because that's when you had to have spent it. That's the requirement of the PPP funds, right?
Mm-hmm.
So you're going to recognize that revenue then. But whether or not you request forgiveness is a whole separate activity that there's sort of different guidelines right now on what to do or different interpretation of the guidelines on what to do. And I do think, Mark, that was information to me yesterday as well, that we should wait till 2021, especially if we were over that 50,000 threshold. And he said if you're an LLC, he said if you're sole prop, it maybe makes more sense to just do it now. Anyways, this is where I definitely rely on their advice. And they're just interpreting it as well. They're reading into the legislation that's there and how it's being interpreted, and no one has the exact answer, because unfortunately this was all put together so quickly, and there's not enough guidance at this point.
Well, the deal is, when do you want it to affect your taxes? So if you request forgiveness now, it's going to hit your taxes this year. But if you wait till 2021, it affects your taxes for 21. So however you want to play it.
Yeah, so the long and short answer of this here is going to be work with your CPA, check with your bank, and make sure that you're interpreting in the way that's going to work best for you. All of this gets back to getting some information in this financial projection document that is going to do a couple of things. Number one, we want some logic that's going to tell us what we think the next 2 years is going to look like in the future. And this final tab is going to enable us to compare this a little bit to the past. It's going to enable us to look at how this compares to our year to date. And it's also going to tell us a little bit more about how this compares to 2019 and 2018 for businesses that have those pieces of data. The big takeaway here is that you're wanting to build something that's going to help you get a little bit of a picture of what your climb up the mountain is going to look like in 2021 and 2022. Where possible, it's going to be based off of past data. So for example, how fast you climb that mountain. You're going to create your logic model to tell you what these things could look like.